For decades, the U.S. dollar has been the backbone of global finance. But today, rising debt, inflation, and geopolitical tensions are raising a serious question. Could the dollar's dominance be at risk? To understand this fear, we must examine what gives the dollar its extraordinary power. It is not just a currency. It is the world's primary store of value, unit of account, and medium of exchange.
Most global trade, from oil to food, is priced in dollars. Countries need dollars to participate in international markets. This demand creates a natural stability that no other currency has achieved.
However, America's soaring national debt, now at historic highs, has raised concerns about long-term sustainability. Many worry the U.S. is borrowing faster than its economy can realistically support.
Even more alarming is the speed at which the U.S. prints money during crises. Although necessary to prevent collapse, money creation weakens trust in the dollar's future value.
Inflation spikes in recent years have shaken global confidence. When Americans feel their dollars buy less, the world notices too. Stability begins at home, and instability spreads quickly. Geopolitical tensions also play a major role. As rival powers grow stronger, they look for ways to reduce dependence on the U.S. financial system. This puts pressure on the dollar's dominance.
The BRICS nations, for example, have openly discussed creating a currency alternative for trade. While still far from competing with the dollar, the movement represents a shift in mindset.
Many countries are also rebuilding gold reserves at a pace not seen in decades. Gold is viewed as insurance against a future where the dollar may not be as reliable as it once was.
New payment systems outside of SWIFT are emerging, driven primarily by nations seeking political independence from the U.S. These systems challenge America's influence in global finance.
Still, the dollar remains incredibly strong. More than 60% of global foreign reserves are held in USD. No other currency comes close, showing deep trust in America's financial stability.
The euro once looked like a strong challenger, but internal fragmentation and repeated crises have weakened its potential. Investors still see the dollar as the safer long-term choice.
The Chinese yuan is growing in influence, yet strict capital controls and lack of financial transparency make it unsuitable as a global reserve currency for now.
Even as alternatives rise, global investors continue buying U.S. Treasury bonds. These bonds are considered the world's safest financial asset, anchoring the dollar's dominance.
But this dependence is also a vulnerability. If foreign investors ever lose confidence and stop buying U.S. debt, the dollar could face unprecedented pressure. For now, demand remains strong. During global turmoil, investors always rush toward dollars, not away from them. Crisis ironically strengthens the currency seen as safest.
However, heavy reliance on foreign trust means America cannot afford large political or economic mistakes. Stability is essential for maintaining global confidence.
The rise of digital currencies adds another layer of uncertainty. Central bank digital currencies could reshape international payments and reduce the dollar's global reach. If major countries adopt digital alternatives for cross-border transactions, the need for the dollar as a settlement currency could gradually decline.
Still, technology alone cannot overthrow decades of trust. The financial world changes slowly, and replacing the dollar would take immense coordination among nations. America's military and diplomatic power also support the dollar's dominance. Global stability created by U.S. alliances reinforces confidence in its currency. But recent political divisions raise concerns about America's long-term governance. Investors watch closely because instability weakens belief in future economic discipline. If mistrust grows, countries may accelerate de-dollarization efforts, choosing to trade in local currencies or diversify their reserve holdings. Energy markets play a crucial role. Oil has been priced in dollars for nearly 50 years. If large producers shift to other currencies, it could deeply affect global demand for USD. Saudi Arabia and other major exporters are exploring alternatives, not to replace the dollar, but to reduce dependency. This signals long-term strategic change. Yet oil markets still overwhelmingly prefer USD for simplicity, liquidity, and global acceptance. Changing this system requires huge reforms and cooperation. The biggest threat to the dollar may not be foreign rivals. It may be America's own financial behavior. Overspending and rising deficits are long-term risks. If the U.S. fails to control debt or inflation, trust could slowly erode. Confidence is fragile, and once lost, it is extremely difficult to rebuild. But a collapse is unlikely. The dollar has survived wars, recessions, bubbles, and crises. Each time, it emerged stronger, proving its resilience. The most realistic scenario is not sudden collapse, but gradual decline. The world may move from dollar domination to currency competition. More countries may diversify reserves, reducing exposure to the dollar. This won't replace USD, but will slowly weaken its global share. Trade blocs could increasingly use bilateral currencies, especially in Asia, the Middle East, and Latin America. This reduces reliance on the U.S. financial system. However, fragmentation also creates inefficiency. Many nations still prefer USD because it simplifies transactions and reduces risk. The future of the dollar depends heavily on American policy. Fiscal responsibility, political stability, and strong institutions are essential to maintain trust. If the U.S. demonstrates discipline and stable leadership, the dollar will remain the world's anchor. Confidence is the currency's greatest weapon. But if instability grows, challengers will gain momentum. Nations always search for alternatives when dominant powers appear weak. The question is not whether the dollar will disappear. It won't. The real question is whether it will remain as dominant as it has been for the past century. A world with multiple strong currencies may emerge. This could reduce U.S. influence but create a more balanced global system. Investors should watch debt, inflation, geopolitical shifts, and energy market changes. These factors will shape the dollar's future strength. While risk exists, history shows the dollar adapts. Its unique combination of economic scale, security, and trust makes it difficult to replace. Even in decline, the dollar will remain a major force. Currencies rarely lose dominance overnight. They fade gradually over decades. The U.S. must focus on long-term stability. Sustainable spending, credible policy, and strong institutions are the pillars of dollar confidence. If these foundations hold, the dollar will continue leading global finance. But ignoring these pressures could accelerate decline. Most likely, the dollar transitions from absolute dominance to strong leadership, sharing influence with other currencies in a more multipolar world. This shift is natural as the global economy evolves, emerging markets grow, new technologies rise, and trade patterns transform. The dollar's story is far from over. It remains the anchor that keeps global markets stable, even when America faces challenges. But whether this anchor stays strong depends on choices made today. The future of the dollar is ultimately the future of American policy. As long as investors believe in U.S. stability, the dollar will hold its power. Confidence is the true foundation of any currency. The world is watching. Every economic decision, every political shift, and every crisis shapes the long-term fate of the U.S. dollar. The dollar may not collapse, but its era of effortless dominance is ending. The question now is, How will America adapt to a world where competition grows stronger?